Yo, what's going on? This is episode 187. How you know it's gonna be killer? You heard? Another episode of that Victory Talk podcast. We got a lot to cover, so let's get into it. Yo, what up, man? Welcome to another episode of that Victory Talk podcast. I am your host, Big Brandon Carter, BBC, King Keto, the king of ketosis, Gymnasium Jesus, Jesus de Gimnasio para Miente. And I'm joined, this is episode 187, so you know it's going to be killer, right? And I'm not alone. I'm joined by the best producer in the game, straight out of Iran, Nima. What's up, homie?
All good. Super excited. Let's get it.
Let's go. And I'm also joined by Minovia. She's manning the super chats, making sure everything is copacetic. If you get kicked, if you start talking crazy, she's gonna kick you out and ban you. Right? She's gonna ban you with the quickness. She got an itchy trigger finger. You gonna fuck around and get banned. All right. And I'm also joined by you, the Victinators. Right? Y'all here for Victory Talk. Y'all gonna victory listen and victory learn about how you can how to become victorious. It's the only podcast that's all about how to build your money, muscle, and mindset. And today we're gonna have a sharp focus on money. Right? Before we get into it, we got some sponsors. Yeah, we got some sponsors. So the first sponsor is the newsletter, Big Money Methods. All right, this is written by me and the homies, me and my team. Hit the link in the description. Put your email in here. All right. And then twice a week, you're going to get emailed articles on methods to help you get big money. All right. You know what I'm saying? This is written by my homie Chris. He's one of my top salespeople. The homie Sean, he's one of my top copywriters. And then obviously me, Gymnasium Jesus, we in here. Top personal development books. We got show you how to get AI money. You know what I'm saying? How to burn more calories. It's lit over here. This is the newsletter that accompanies the Victory Talk podcast. All right. We also, now this is a product, I haven't talked about it much on the podcast. All right. It's kind of been me and Neiman's been working on in secret. All right. But we're about to launch this product. It's called Thought Repellent. All right. This was made because I saw too many guys were getting their lives ruined by these thoughts, right? And so I had Nima go to the Middle East or Sand Asia to find some scientists, some Iranian scientists. And what we did was we put together a formula. And once you spray this on your body, it will only affect the DNA of thoughts. Like regular women, they'll smell it and they'll be like, man, you smell amazing. What is that smell? They'll be more attracted to you, like good women. But like this will repel the DNA of thoughts, sluts, hoes, hoe sluts, slut hoes, stank hoes, tramps, skeezers, Jezebels, chicks named Tiffany, Chick's named Ayana, and and we just added hood rats, right? So now because some hood rats was sneaking through, but we perfected the formula. Now here's the thing, guys. This is ready to go, but we got to get more. We need to put it into production, and I don't want to go get. I could go to like venture capitalists, angel investors, and say, "Hey, man, I got this thing," you know. But I don't. But then I'm gonna have to answer to them. I only want to answer to y'all. All right. That's why all your super chats are gonna go towards the development of thought repellent, so we can get this into production. All right. We can get this into production and release it to the public. The goal is to have it by summer, right? Because that's the thought breeding season. All right. That's when they come out in the woodworks. All right. That's the mating season for thoughts. All right. And if you don't go out, if you go outside with no protection, you may end up with a thought you don't even know it. Next thing you know, she having your black babies. You know what I'm saying? You don't want that. I don't want that. All right. And you can stop it. You can prevent this from happening to you and your fellow ballers by super chatting here. All your super chats go towards the development of thought repellent. I think we have a hero who's already contributed to the fund.
We have TT Velez, your BBC. I've been working hella overtime, like you said, but I'm getting taxed like crazy. How do I avoid this?
Yo, you can't avoid taxes, homie. That's part of the game, player. That is part of the game. They're gonna take it right out of your check. If you work in you know, you're just a regular W-2 employee, they're gonna take that shit right out of your check, homie. You know what I'm saying? That's just it is what it is. You know, if you ain't got it, I don't know where you live, but if you live in a state with state income tax, I mean, one way to avoid it is to get up out of there. You know what I'm saying? Get on up out of there. That's what I did to evade. I mean, to save on taxes. I left New York State because ain't no state tax in Florida. You know what I'm saying? That was a baller move. That was a baller move. I gave myself a huge raise. Gave myself a huge raise as a result. But you on the right track. But yeah, taxes is a part of it. We all got to pay taxes, me included, man. Much to my chagrin, you know. All right. But yeah, ain't no way to avoid taxes in America. If you would live in London or UK or some shit, that's why those guys go to Dubai, because they don't have to pay any taxes. Doesn't work for an American. If you're an American and you go to Dubai, you still got to pay taxes. You wherever you live in America, you got to stay. If you are an American citizen, you still have to pay taxes wherever you live on Earth. All right. But in the UK, they got something different. So I don't know. All right. Yo, hey guys. So like the episode before last, I was talking to you guys about ways to make money. Well, how to make so much money that it feels illegal. All right. And it was a bit real business heavy episode. And I didn't finish it because I was giving y'all so much game. So we're going to get right back into it. All right. That's what we're about to talk about now. All right. So in the last video, I talked about the 4 different products. You get 4 different types of products, you know, trinkets, commodities, necessities, and luxuries. And I talked about how you want to position all of your products as luxuries, right? Because you can charge more and then people will be also more excited to buy. Now, what we need to focus on is how do you stand out? If you have a product or service that you're trying to sell, right? How do you stand out in the marketplace? And the way you do that is by having a niche or niche. Oh, you're not seeing, hold on. Let me see. Whoa. You see it now? All right, cool. Something's happening with my screen. All right. You want to have a niche or niche, all right? And the way I think about niche is, who are you going to market to? All right. What problem are you going to solve for them? Right? Because business is all problem solving. For example, I'm thirsty and I don't want to drink out of plastic bottles. Liquid Death solved that problem for me by putting it shit in the can. You know, I needed a microphone that I can scream into, right? And it'll pick up my voice, but it won't pick up the surroundings stuff, right? And Shure solved that microphone. I mean, Shure solved that problem for me with this microphone, and they were all compensated for it, right? So what problem do you want to solve for the people? And then how are you going to solve that problem? And you want to do it in a unique way. It's key to have a unique mechanism to solving the problem, right? And so when I first started my online training business, right, I was one of the first people to start online training back in like 2009, 2010. I was one of the first. I was in the class of people who started online training. We had to invent it. And one way I stood out, and this is what I teach my students now, one way I teach them to stand out is that first we got to think about your target market. So you want to think about your gender. What gender do you want to market to? So it's gender and age, right? And so when I tell trainers this is going to work for all businesses, and I'll show you an example. But when I tell trainers this, I say, man, you want to train men or women when they want to be online trainers? And they say, man, I want to do both. And yeah, you can probably train both, but you can't market to both. Let me give you an example. So look at this secret deodorant. Without knowing anything, can you look at this and tell me who it's for? Right? Is that for men or women? Right? Look at the font, the color, the names, the name of the flavor, scent, powder fresh, secret. Look at the font. Right? Who do you think that's for? Right? It's clearly for women. Right? So a woman sees that, they know it's for them. Right? Let's look at this. Oh, now this is Old Spice. This deodorant. Without knowing just looking at this, who do you think it's for? Right? Men or women? I'll give you a hint. There's a bear attacking the name. There's a fucking wolf attacking the name, a wild animal. Who do you think it's for? Right? It's for men, right? You know, now, are men's armpits that much different than women's armpits? Nah, they're pretty similar. Chicks be stinking too. All the real players know that. Chicks stink sometimes. Every dude has all over. Every dude has a stank pussy story, and none of those stories end with him not fucking. 100% of them. All right. But I digress. Our men and women's armpits are pretty much the same, right? Why do they have to have two brands? You know, this is the same fucking company, right? Procter & Gamble owns both of these brands. So even this is $1 billion company, and they don't try to market to men and women, right? They create different brands to market to men and market to women. So let's think, what will we call this shit if we wanted to market to men and women? What colors will we pick? What fonts will we pick? We wouldn't have a wolf on it. How are we going to do it? It's not going to be pastel Easter bunny colors. This looks like it's for the Easter bunny, right? Right? We can't market to both. Okay. It's very important. So when I started my online training business, I decided that I was going to market only to men, right? But not all men. You have to pick an age range. Now I can train men of all ages, right? I can train a toddler, and I can train the senior citizen, but I can't market to both of them because they have different interests, right? My son's a toddler. He's fucking with Paw Patrol, and and you know, senior citizens are watching like Fox News and shit, right? So the age group, I think you should have a 10-year age group. So I picked guys aged 25 to 35. Right, adults, right? And then I said, hey, what problem do I want to solve for them? The problem I wanted to solve for them was getting ripped. I can help people with all types of fitness problems. I can fat, obese people. I can help people. I've trained pro athletes. I've trained obese people. I've trained fucking bikini models, you know, like I've done it all, but I can't market to all of them, right? So when I was in-person training, I trained all type of people. When I went online, I had to pick my market, my target market. It's very important. And it was guys who wanted to get ripped. Oh, I spelled that wrong. Guys who wanted to get ripped. So this means I ignored all the people who all the obese motherfuckers. I didn't care if guys wanted to live longer or longevity or people wanted to be pro athletes. It's just guys who wanted to get ripped. And I use their language, right? As a trainer, I know when they say ripped, they want to be muscular with low body fat. All right. I know what that means, but I'm using their terms. If I was marketing to women, I would have said toned. Same thing, muscular with no body fat, with low body fat. Right. Even though trainers hate the word tone, I don't give a fuck. I want to use what the market is saying. I want to get in their brain. All right. Here's where it gets important. Why does a guy age 25 to 35 want to get ripped? Right? Why? Right? Boom. I knew that this guy, the only reason he wanted to get ripped was to get girls. That's the main reason. Right? Because a guy this age group, it's difficult for him to think about anything else. Right? So to get girls. So if you look at my old videos and my old marketing, it was all about, I mean, no, it wasn't all about that, but it was like I was always surrounded by young, beautiful women, right? Not like Drizzy young, but like, girls in their 20s. girls that guys this age group would like to mate with, right? And I wasn't marketing, I didn't have them in the videos because I was marketing to women. I had them to market to y'all, right? And it worked super well, right? That was the subtext. And the reason it's this why that gets important. This is why you have to pick a gender and an age group. It's because of the why. It's because of the why they want it. Because a guy, a woman that age, she might not want to get guys, right? Fucking ugly chicks can get guys, right? She might want to feel more confident or whatever. A guy who's older, he might want to have more energy to play with his kids, right? I'm 40, right? So I think about that all the time. I want to have energy to have fun with my son, my niece and nephews. When I take them to the trampoline park or other shit, I want to be able to be active with them, And then in my 40s, I'm thinking about longevity, right? But when I was 25 to 35, I was thinking about girls, right? So when the age or the gender changes, the why changes, right? And the reason we want a 10-year age gap is because a guy, I'm 40, I don't think the same way as a 20-year-old, right? If you meet a 40-year-old guy who's thinking the same way as a 20-year-old guy, he needs to grow the fuck up. You know what I'm saying? He should. He's not supposed to. Motherfuckers ask me, man, you heard that new Playboy Cardi album? No, no, that's just not for me. That's for the young people. I hope y'all enjoy it, right? But it's not for me, right? I'm not Playboy Cardi's target market, right? Anyway, right, to get girls. So it changes, right? This is my example, right? And then how you want to have a unique mechanism. And my unique mechanism at the time back then, it was intermittent fasting and HIIT cardio. Right. This is how you stand out. So on like trainers, it's a crowded market. It's a crowded market. Think about how many trainers there are online. It's probably millions, right? We don't want to compete with all these assholes. That's a sucker move. But the niche allows us to stand out. Let me explain. So this is all trainers. And I'm just using trainers as an example. This works for anything you're selling, right? So I'm only focusing on men. Pause. So so half the competition is gone, right? Boom. But it's not even all men. It's just young men. Pause. Right? It's a small segment of that population. Right? But it's not even all of these men, right? It's only the ones who want to get ripped. So let's say that's, I mean, it's probably, let's say that's half of them. Boom. Right? Okay, cool. Right? But then it's not even all of them. It's only the ones who want to do it, who are down to do it with intermittent fasting and hit cardio. Right? So now this is how I started to stand out. Because at the time, there weren't a lot of trainers who focused on intermittent fasting and hit cardio. And intermittent fasting was like a new thing back then too, right? Then I switched it as I got older. When I started doing keto, I switched it to ketogenic diet and bodybuilding. I did less hit cardio because I got old, and it changed to keto. Fuck. It changed to keto and bodybuilding. Bodybuilding style workouts. All right, now check this out. But it would still get ripped, and then it changed to I upped it to like 35 to 45. I changed my demographic as well. Right. Okay. Now, how many and then it wasn't just as I got older, I changed it. It wasn't just to get girls like that. That's not what the older guys are thinking about. So the why changed. Now the why changed to health, energy, longevity. You get what I'm saying? Because the why changed when the demographic changed. Even though the what stayed the same, the why changed. So when I was smart, so now the marketing, I'm not selling, even though I'm an online trainer, I'm not selling diet and workout, right? I'm selling health, energy, longevity. You get what I'm saying? And keto and bodybuilding is keto diet and bodybuilding is the mechanism, the unique mechanism I use to help my clients not just get ripped, but get ripped so they have more health, energy, and longevity. See, when this is how you start making your marketing. You make your marketing around the why, because people don't buy things; they buy what those things are going to do for them. Does that make sense? They don't buy things; they buy what those things are going to do for them. Right? I bought this iPad I'm drawing on, but I didn't buy an iPad. I bought this for the ability to fucking scribble on the screen and y'all can see it on YouTube. You know, that's what I wanted. And I did that so I can illustrate my thoughts better and teach better and make better videos. So I paid for better videos, and Apple just solved that problem for me with an iPad, right? You want to get down to the root, to the why. I'll give you an example. There's an example I heard a long time ago. There's a guy, he goes into a hardware store and he's trying to get a drill. He goes in the hardware store for a drill. And the salesman's like, all right, man, what kind of drill are you looking for? He said, I don't know. And then the guy said, okay, well, what do you need the drill for? And he says, I need to build some shelves. Okay, what kind of shelves you building? He's like, what kind of stuff are you gonna be putting on the shelves? Oh man, I got these books and shit all over the crib, so I need to build these shelves to put the books up. You say, okay, let's just say he asks, why are you doing that? What makes you want to do that? It's, oh man, because I had the shit all over the crib and my wife's always complaining about it's messy, right? So if when I build these shelves, put these books up, she'll shut the fuck up, right? So he's not buying a fucking drill. He's buying a happy home. He's buying his wife shutting the fuck up, finally. You get what I'm saying? Because if the drill don't work, if the shelves don't work, he's gonna have to go Chris Brown on her. You feel me? You know, and he don't want to do that, right? Because we know that story ends, right? So anyway, he's gonna do, he's bought the drill for the happy home, not because he gives a fuck about drills. You know what I'm saying? Like So as a trainer, I knew these motherfuckers they don't want fucking diet and exercise. They want what it's going to give them. So when you're making your product or service, you need to do this exercise, right? Pick the gender, pick the gender and the age group. What problem you're going to solve, but it's super important that you know why they want that problem solved, like what that's going to do for them. Okay. And then you come up with a unique mechanism, something that makes you stand out to help them accomplish that. I hope that makes sense. Now think about it. Think about it. Me as a trainer. By this time I went keto, there was fucking millions of trainers online, remember? But how many trainers, even right now, how many trainers help men age 35 to 45 get ripped with the ketogenic diet and bodybuilding training? Like, how many can you name who focus on that? Like, they might be able to do it, right? But they doing a whole bunch of other shit. How many of them focus on that? Not many. You probably can't think of 5 off the top of your head, right? You get what I'm saying? This is how you stand. And this is how I teach my trainers who are in my high ticket trainer program. This is how I may help them stand out within the marketplace. Now, all your marketing if you want some more help with that, if you want to learn more about that, I got a free ebook called The 10 Commandments of Online Training. If online training is something you're into, right? Download the book. It'll show you how to grow your online fitness business. It goes into this in way more detail, but it'll show you how to grow your online fitness business, even if you don't have a big following, even if you're not certified, even if you don't have a lot of experience. Click the link in the description. But this is going to work for any product or service. You have to go through this exercise, right? You have to go through this exercise and then find out once you go through all this, all your marketing is going to be around the why, because you're not selling the thing, you're selling the why. Let me show you some examples. If we go on Instagram, you know what? Not Instagram. Let's go on YouTube. If we go to Red Bull's page, right? We know what does Red Bull sell, right? You might think, oh man, they sell fucking a nasty energy drink, right? That's not what they're selling. That's not what they're selling. Look at all of their marketing. These motherfuckers are selling adventure. You get what I'm saying? All their marketing is like not even about the fucking drink. They're selling adventure. This is why this is $1 billion fucking brand. Or they're selling adventure. They're selling action. Who's their target market? There's probably some women who drink Red Bull, but it's fucking guys, younger guys. Am I right? Because how many women do you see risking their lives on a fucking consistent basis? You know, that is men. It's men. And if we wanted to get really, all types of people drink Red Bull, but who they're marketing to is important. They're marketing to young men and young white men, right? Let's be honest, right? Because this is white boy action stunts. Like, you almost never see a nigga doing this shit, man. How many Dominicans you met who do this type of shit? You know what I'm saying? In my whole life, I ain't never seen a Chinese man do some shit like this. Right? That's the target market. White boy action stunts, right? But what we need to focus on is the fact that you don't even see the fucking can in this shit. This is their YouTube page with 22 million subscribers. I don't even see the fucking product. They're going all in on selling the why. You get what I'm saying? They're going all in on selling the why. Why you want this? So you can do white boy action stunts. And they're all in on this, right? They're not talking about the health benefits. They're not talking about how it'll quench your thirst. None of that shit. Let's go to Gatorade. Let's go to Gatorade. What's Gatorade selling? Let's go to their page. Do they have a fucking Instagram? Does Gatorade have an Instagram? Do they have a YouTube page? All right, here we go. Let me make sure. Let me go. Let's go to the shorts. Right. Okay. Look. Look at this. What are they selling? right? I don't even see the motherfucking drink. It's just their athletes doing shit, right? They're selling performance. They're selling athletic performance. Gatorade is just a tool. They're not even talking about the features of benefits of this shit. Let's watch this shit. What's this? Look at this.
Except for the most important thing. What you have inside. It is what drives the game.
Look at this shit. We don't even see the bottle. There's the bottle.
It refuses to be ignored.
But what are they selling? They're not selling sugar salt water, which is what it really is, right? They're selling athletic performance. And they're doing a great job. This is a $1 billion company. Like, look what they're selling. Their target market is athletes.
The game will always change.
Now they're a bigger brand, so they can do. No, here's the thing: as you get bigger, you can market to men and women. You can broaden your market, but initially you got to focus on the most narrowest market, right? Gatorade has a multi-billion-dollar budget, right? You don't. Not yet, at least, right? So when you get billions of dollars, you can still focus, but they're still just athletes. They're not trying to sell to my fucking mom, right? They're not trying to sell to no one but athletes. They're going all in on that, right? But initially it was all men. When I was a kid, it was only men in Gatorade commercials, right? But now they got women in that shit, you know, a few of them, you know, right? But you see, look at this. Nike does a lot of the same thing. Now, Nike's $1 million company, so they're probably going to have some men and women. It's cool. Which one? Okay. Let's go to the shorts, just so you can get a good idea. Right, they're selling athletic performance. They're going all in on. Now, Nike's actually making a big push to get women athletes right now, right? So just keep that in mind. But it's all good. It's all athlete. What are they selling? They're not selling the shoes. They're selling the performance. You know what I'm saying? Like they got the homie Wembley, and they're just gonna talk about how dope he is. And the subtext is, yo, you can be this dope if you wear this Nike, if you wear this shit, right? They're selling the why. And that's what we need to focus on. All your marketing has to sell the why. Okay. All right. And that's how you stand out. You sell the why, and then you tell them that the how is the best way to get the what and the why. Does that make sense? But the what and the why changes depending on the who. You get what I'm saying? Right? If I was making sneakers for fucking old people, I wouldn't have this fucking 19-year-old rookie of the year motherfucking around the court. You know what I'm saying? I would have fucking Stan Lee or some shit. You know, he did, but you know what I mean. He's the first old person I can think of. All right. Now, once you get your niche down, your target market, you got your who, your what, and why, right? And all your marketing is going to be around selling them the why, right? Okay, well, let me before I go into that, and this is very important that you only sell the why, because people do not buy features. So you got to understand the difference between features and benefits, right? So a feature of this fucking liquid death water is that it's in a fucking can. The benefit is it stays colder. It has a better taste because it's not in plastic, and I won't get as many microplastics in me. Those are the benefits. But the features is fucking spring water in a can, right? What a mistake a lot of marketers make is they try to sell the fucking features, but people don't buy features. They buy benefits, right? For example, this iPad that I'm drawing on right here, it has all, I don't give a fuck about the CPU. I mean, it matters if you know that thing, but the benchmarks, the CPU, the GPU, all this other shit inside of it. Listen, man, what's it going to do for me? right? Not all the features that it has. What the fuck is going to do for me? And I think a big mistake I see a lot of rookie marketers make is they focus on the features, but people don't give a fuck about the features. They only care about the benefits, and the benefits have to relate to their why, right? It's very important. And the why will change depending on the who. Does it make sense? All right. Now we're going to talk about sales next, but first we're going to take a break from this to bring in the homie Young Candlestick, talk about the market update. Yo, Young Candlestick, what up, Playboy?
Hey, good to see you. There's a lot going on in the markets right now.
Yeah.
The market had a big down day yesterday. Today, we have what's called a doji day, where it was kind of indecisive. Basically, we had a big upper wick and then also a big lower wick today. And that just means there's a lot of indecisiveness right now. Now, there's going to be some economic data being released over the next coming days. And one of them is going to be GDP. And that's going to probably spike the market up a lot or down a lot. So what I have on my chart actually is this blue box. And this blue box is going to be key to the next direction of the market. I think if the SPY breaks above and holds above 575 and turns it into support, you could see a 1 to 2% rally to the next resistance. If
hold on, hold that thought for 1 second. If y'all want to ask Young Candlestick a question about any stock, any instrument, any security, go ahead and just he'll answer it if it's a super chat. All right,
super chat only.
Let's keep going.
Definitely. And so if SPY breaks underneath today's low, we could be retesting these lows, and that could be a 2.5% drop. If those lows can't hold, then we'd be looking at something like SPY 540. I don't think this correction gets worse than SPY 520. Okay. And this gets us into, what's actually generating money. And so far for me this year, it's been SPX and NDX, iron condors, and credit spreads. I'm pretty confident I can get an extra 10 to 20% a year off of these iron condors. We did one today. Boom. I said SPX is likely going to close underneath the purple, but it's going to close above the bottom purple.
You ain't text me.
Yeah. It's one of those things. I'll text you next time. Tomorrow. I use basically what you want to use is support and resistance, analyze the option chain, and then I'll also send some charts to AI to help confirm. Sometimes AI is pretty good at predicting the range of the market if you throw it a few different time frames on a chart. And it's just helpful to have a robotic objective opinion on the stock market. So keep an eye out for those. It's something that you can do every single day, and it's defined risk. All you need is $500 in buying power to do that. Now, it doesn't work out every single time. I lost $300 on an NDX iron condor yesterday, mostly because the market was just too bearish. It broke the underbelly of the bottom side of the expected move. So it doesn't work out every single day, but the winners, as long as you have more of them and you have frequent winners, it more than pays for itself. And also you can notice, like when the market starts having these bearish trends, you can see these bear flags forming. What's a bear flag? You have a big impulse wave down, then you have a weak ass bounce. Buyers are weak as hell. When buyers are showing that they're weak after a big down leg, that's considered a bear flag. And you can see that it starts to break down. And guess what? There's many ways to profit from the market dropping. If you ever want to hedge a portfolio or profit while stocks drop, you can go short. That's cool. Or you can buy inverse ETFs. So this is SQQQ. This goes up 3 times the rate that the market drops. And right over here, we went long on SQQQ at about 34. We swing trade it and take profits first thing in the morning. So you can do things like that. You don't want to overstay your welcome in something like SQQQ because it's triple levered. What does that mean? Every time the market goes up and down, these triple levered ETFs decay away. So if you want a little less decay, you can buy QID if you think the market is going to be more bearish. This goes up 2 times the amount that the market drops. So if QID starts to fly high, you have that position and your portfolio gets stabilized. Okay. So the next question is, where are we in the business cycle? Are we in a recession? Like, what's going on? So this is a chart of the standard business cycle. So you got all these different things. And of course, we move in a circle. So we go from left to right. Well, where are we right now? I think we're at the spot where stock prices are falling, and this is where defensive sectors are leading. You see consumer staples starting to lead. I'll show some charts that demonstrate this. And then I think over the next few months, utilities might start to lead. Then financials, that's where they're going to be announcing a recession. By the time the public or the administration or whoever announces the recession announces that we're in a recession, that's oftentimes near a stock market bottom. So if you take away anything from this market update, it's when they announce that we're in a recession, it's a good time to start accumulating stocks. That's not financial advice, but I'm going to be accumulating stocks. But right now, it's one of those times where we want to be super defensive. You know, you can see like XLK. This is the technology sector of the S&P 500. It looks very similar to the QQQ ETF. The XLK is weak. So short tech stocks for now, or just stay away or lighten up the load on tech stocks. If you're into that short-term tactical trading, you know, you want to take a look at consumer discretionary. If we're in a recession or leading into one, people have less disposable income. They're not going to be buying those Teslas, especially if it's just going to blow up the next day. They're not going to be buying as much on Amazon. And those are the two heaviest weights in XLY. XLB is also weak, so I'm kind of looking for a short setup on XLB. We kind of got this lower high, higher low pennant deal going. So if we start to break underneath like 85, 84, I might buy some put options expiring a few months out, and that'll hedge a portfolio and it'll give me a good profit if that does break that pennant bearish. So what are some sectors that we can buy? What can we go long on? Well, utilities might come into rotation in the next few months. The chart is just range bound for now. I'm looking for a breakout over 80.74. If you buy shares, you get a nice 3% dividend. So you get paid as long as you hold on to the stock, or ETF in this case. XLV, healthcare is a defensive sector. Healthcare still kind of stuck. So, you know, the market's pretty weak. Even the defensive sectors that are supposed to be in rotation, they're getting just beaten down. They're being just pushed down. Like they try to come up for air and they just smack them underneath. So keep an eye on those sectors though. XLV, I brought up SCHD. This is a dividend, Schwab's dividend ETF. This pays over 3% a year. Again, I noted you're probably not going to get a lot of price appreciation on this year, but if the market rallies, this will also rally. It's very likely to. Another thing that you can do is, let's say you want to really, really stabilize your portfolio. You can put them in what's called treasury bills, and they're some of the safest assets that you can invest in. Your principal is pretty much guaranteed, like 99.99%. And this is paying 5%.
That chart looks insane.
I know, right? Because it's pricing in when the bond matures. So it's a 1 to 3 month T-bill. So when the bond matures, it's not going to really do much. You know, but it's a great way to stabilize a portfolio. Let's say you want to put like 90% of your portfolio in this. Boom. The most you can lose on a given year is 10%. And that's if you lose every single dollar of your last 10%. If you don't want to do all this, you know, rotation and management yourself, the TAC ETF, it's led by another CMT. I too am a CMT, and she manages her portfolio by doing this type of tactical rotation. So it should outperform during market drawdowns. And if they execute well, it can potentially outperform when the market does well. That leads me into what are the assets that are performing well? Well, gold. We talked about gold so many times on this podcast. How many other podcasts do you have where somebody tells you about the trade before they take it? They take the trade. They show you the trade when it's break even. And now gold is hitting all-time highs. So if you guys followed this trade on the Victory Talk podcast, $450 is on its way to turning into $3,000.
Come on, man.
Still long on gold.
We gave him the trade. All they had to do was watch Victory Talk, take the trades. Yo, man, are y'all taking the trades? Y'all know how much money y'all could have been making just by fucking taking the free game we giving out every week? This is the most underrated podcast on the fucking internet.
Like people would pay money to, hear that publicly. Mm-hmm. And let's say you're not some options geek like me. You're not a certified options trader or anything.
Talk your shit.
Yeah, you can just buy gold shares. You can buy gold shares. We brought up GLDI. This gives income from gold, so it spits out cash dividends from gold. It's going to have less of an appreciation, but it'll give you that short-term cash flow. We talked about GDX, the gold miners. Those continue to break out. We noted this breakout over 42 on the podcast. We talked about silver being a sympathy commodity. That's approaching daily highs. I still like silver long. I still like gold long. The entry gets riskier and riskier, though, the higher that they go. It's ideally better if you're buying these on dips or when we're talking about them before it happens. One last thing. On Tuesday, I gave one trade idea. Do you remember what it was?
I don't remember.
It was a bearish trade idea, actually.
Oh.
It was bearish on AMAT. And I still think that AMAT, Applied Materials, can drop. But we noted, hey, I think the stock can drop 10%. Since we talked about that, the stock is down 4.6%. Nothing crazy, but some put options on this can really pay out if you're, catching these moves. And so look for these semiconductors are still bearish. You can take a look at SMH. They're leading to the downside. That's just a tough market environment for everybody because we want the semiconductors to be strong.
Yeah.
Making all-time highs, breaking out. It's doing the exact opposite of that. And this, again, is looking like it's breaking the bear flag a little bit early. You can see the rise in bearish volume. You can see its relative strength compared to the SPX. So when you see a downtrending relative strength line, that's the sector that you want to be looking to make shorts on until that trend gets broken. Then it's until the relative strength line starts making higher highs and higher lows. So you can trade that.
All right, yo, listen. You got two questions, but before we get to them, can we just talk about the stock that I've been calling out for months now?
I would love to.
Berkshire Hathaway.
Just the best money managers ever. Yeah, what a bunch of ballers.
You know what I'm saying? I got my man. I got little Charlie's book. Jeez. Right here, man. Charlie.
He's an
rest in peace. Genius. Rest in peace,
I don't
Charlie.
know if I've read that book. I think I've listened to a bit.
Shit goes hard. Shit goes hard, man. Yeah. Anyway, man, what Charlie talking about, man? What he talking about from the grave?
I mean, he's basically saying our company's going to all-time highs while everybody else is searching.
Everybody else is shit in the bed.
Yeah.
Can you tell him when I called it out though?
Oh yeah.
When I said, "Hey man, fucks with Berkshire" on the podcast.
You called it out long ago. I'm pretty sure back over here, but definitely over here when it was at 440. Definitely over here. We noted the trade idea. The Victory Trades trading channel long over 500. And ever since then, it's at 537.
Come on, man.
I mean, that's a huge flex to have your stock hitting all-time highs while the market literally can't bounce.
Come on, man. I'm just saying, man. That's why we fucking with young Charlie, man. Little seriously, Charlie.
That's like going to the gym and everybody's like benching the bar, and then you just like load up 500 pounds and just start repping it.
That's exactly, man. You got two questions, homie.
Oh, let's check them out. What's the first one? How do I feel about crypto? That's a good question. And I'll preface this by saying you want to remove emotions from the market. I don't feel anything about crypto. Yeah. I objectively analyze it. And when I objectively analyze it, it's still stuck in that range. You know, I like crypto. I like Bitcoin long-term. Maybe strategy or MicroStrategy can do well long-term. I would say I'm just going to watch it technically. So if Bitcoin breaks above 100,000, that's a huge green flag. Right now, though, it's just chopping and flopping all around. It's not really doing too much. You can also take a look at Ethereum. A lot of altcoins are tied to Ethereum's price, and Ethereum still looks ugly as hell. It's just in that downtrend.
Ethereum looks fucking awful.
It's awful. And so there's a lot of conflicting data. Another thing too is cryptocurrency. it's tough for it to catch a big bid. It's tough for it to go up a lot when we may be headed into a recession. At least there's more and more signs of it. Maybe we can get ourselves out of it. Maybe, the tariffs or the external revenue service, brings in a ton of cash. That could potentially explode things higher. But until then, we're underneath resistance. Crypto, I'll give it a yellow flag for now.
Yeah.
Yellow flags. That's all I gotta say.
This ain't political, what I'm gonna say. Like, it's not political at all. But every economist unanimously agrees that tariffs are a bad idea. Like, there's Nobel Prize winning economists saying, hey man, this ain't a good idea for the economy. Now, I'm not saying it's the right or wrong thing to do. He might be playing, like, he might be making moves, shit we're not thinking about. It might not just be the economy. He might be thinking like 5-6 steps ahead of us. I don't know. But as far as the economy is concerned, all the economists, Nobel Prize winning economist says, hey man, it's a bad idea. There's one Nobel Prize economist says, yeah, it's probably one of the stupidest ideas he ever heard, right? As it relates to the economy, right? And as it relates to this, right? He might have it might helps in some other facet, you know what I'm saying? He's not a dummy, he knows he's got a game plan, right? You know what I'm saying? I gotta assume he's got a game plan, right? So it's not a political thing, but I would be bracing for something like that.
And we haven't seen the effects of tariffs just yet. We'll see those in probably 3 to 6 months. Right now, the stock market's trying to price in what's going on. Tariffs on, tariffs off. How is this going to affect the auto industry? What are the semiconductor foundries going to be doing? If they're going to be taxed heavily, that's going to affect the gross margin of these businesses. It's going to hurt the stock price.
Come on.
It just has to. And if consumers need to, spend more money, if there's more inflation, they need to pull from their stock accounts to pay for those higher living expenses. Yeah. So it's all interconnected and it's super complex. Like you pull one little lever, everything moves.
And because of that, I'm expecting the market to go down over there. That's what I'm thinking, right? So I'm in a lot of cash and I'm dollar cost averaging into Bitcoin.
Yeah.
I'm dollar cost averaging in the bit, but not the actual crypto, the IBIT.
Yep. Yeah.
The ETF.
Yeah. It's super simple. You're not going to actually own the crypto, but you're going to get the gains from the crypto. I'm not going to take my Coinbase wallet and try to exchange currencies and
get the fuck out of here, man. Like I'm just dollar cost averaging. As it goes down, I just keep buying more. And I think it's like a super long-term play, like years,
Yeah. Brokerages like Robinhood and SoFi, you can just set up auto invest, throw in $50 a week, $100
and if
a week.
And if you got leverage, if you got leverage, you can buy more, right? That's what
I would say for leverage or margin investing, big crash.
I keep margin on all ways, but I'm balling like straight up, super rich. All right,
you can do that.
Well, you're saying it's smart
though if you can back it up.
I'm a gunslinger. You know how I roll, Greg. I'm a gunslinger, man. Like what you're saying is right if you're cautious, but I'm out here kicking the door, shoot everything that moves. That's how I roll. You know what I'm saying?
It also comes down to like what's in your portfolio. You mentioned that if you're going to short the market or take bearish positions, it's much safer to be in margin. The worst case scenario is you're in full margin, you have no hedges, and then the market drops a ton and then you get liquidated.
Yo, can we short Google? I know that's your fuck, but like when I'm looking at the chart, I think that shit is gonna go. I think that shit wants to fucking collapse.
Google's pretty bearish. It's got a weakening relative strength line. Is it the best short? It could be. I would just say let's short something else that isn't.
There's a divergence on the MACD.
Oh yeah, let's pull it up. Do you want a regular MACD or a volume weighted MACD?
You can do the regular, the regs.
The volume weighted MACD helps with timing because it counts volume into it. But yeah, I mean it's beneath the zero line, so it's in a down.
And I'm saying like look when it was at its all-time high, and then look at the MACD. Look where the MACD was.
Bearish divergences everywhere in the market.
Yeah, it's like It's like, yo, man, we should have known that time. So when we took that trade, we should have known from the MACD.
We had the earnings report, and I was wrangling with AI, and AI was like 75% chance Google's bullish.
They screwed us.
They rugged it. And
Anyway,
like, most of the time, AI's been right on earnings. That time they rugged it, and I did have a heavier position size, and that just
I went balls deep.
I have no regrets though. If I see this chart 9 out of 10 times, I'm still going to take that same trade. I have no regrets on that one. Like I
do, because the MACD kind of just tells the story. With like, the MACD divergence would have fucking scared me if I was so hype about this AI shit. Anyway, you got more questions?
You can see that. Okay, long-term thoughts on movie stocks like AMC. Yeah, so I know, right? Grant and I are both laughing already.
When last time you've been to how many movies have you went to this year, Greg?
Maybe one. I can't remember. Maybe I saw Venom 2 or something.
No, how many movies you been to this year? 3 or 4. You been to 3 or 4? Oh shit.
Okay.
All right.
So this gets me into
movies this year.
This gets me into Snow White. So Snow White, Disney, they invested $250 million into this shitty Snow White movie. Advertised the hell out of it.
I did go to the movies. My fault. I saw a movie with my son. We saw Dog Man.
Oh, that's cool. Was it good?
That shit was fucking insane. I felt like I watched it. I felt like I took acid, but I didn't. That was just what was on the screen. It felt like an acid trip.
It was made for those that were like high on something.
It was fucking insane. I walked there just questioning everything. You know what I'm saying? But keep going.
That means they did a good job. Well, basically, Disney fucked up on Snow White, and it's just a testament to what's going on with the industry. Again, I'm not a big fan of AMC. It already had its pump and dump. There's so many better investments. It's just they're just scamming the people that are buy the dippers and hodlers, and it's really sad because what they do is they get everybody to rally into it. Then what they do is they do an offering. So they take a bunch of cash from investors, do nothing to reinvest into the business, and it's probably going into the pockets of the board of directors, the CEOs.
Every time I've been to movies a few times with my son over the last 12 months, and twice we were the only people in the theater on a Saturday. You know what I'm saying? Twice. We were the only people. It might have been like one other family or some shit. It was like less than 10 people in there on a Saturday. When I was a kid, it was never like that.
Yeah, it's always packed. You'd have to like buy the tickets ahead of time to get a seat.
We'd be there early to get our seats and shit, And the theaters are better now. You can reserve your seats. You can order food and shit. And it's like way better. And people just ain't fucking with it like that, man. I'm telling you, I wouldn't put my money nowhere near that shit. What I see from humans.
Yeah, I completely agree. And it also could be like, the movie experience is better, but like, why would you do that when you can just watch something on Disney Plus or Netflix or Hulu or Amazon at home? Or
wait a month. That should be on fucking some streaming shit. Watch that shit in the comfort of your own home.
Yeah, take that extra cash and reinvest it. So I would say stay away from AMC. Sure, maybe it goes through these random squeezes, but sometimes they just pump, dump, zigzag into nothing. Pump.
Yeah,
dump.
You got another question?
Yeah, let's check it out. Would I hop in on BRK? You could, but you have to do like a small position size because
I would wait for a pullback.
Yeah, it's a bit overbought. So like if you're buying something that's super overbought, you can just know that you're chasing and your expected value, the amount you can expect to make over the long run is really low. So you could just buy it up here. Ideally, you wait for a pullback, as Brandon said. A pullback to 500 could be a much better dip buy because that's the former breakout area and it hasn't been retested. So there's going to be fresh orders, fresh liquidity to support the stock if it bounces off of 500. Okay, so that's what you look for. I would say look at something like if you want to buy something. I love Microsoft. I know it's down in the dumps. The chart is ugly, but if you can sit on this for at least a year, 3 years, 5 years, there's a very high probability you're going to get a return on your investment. The fair value is $480 a share. That's only 23% higher from current stock price, but you get a dividend. Even if it does break this like channel lower, so be it. You know, you can buy some more at 325, 320. I think
I love
that's
that stock. I love that
safer.
company, man. I think they're doing a lot of really good things, you know, not even what you think about Microsoft, like their cloud computing business is it's big money making for them.
All like big businesses use Microsoft Teams, like
Microsoft Teams, Microsoft Cloud, Azure, I think it's called. They're not fucking around, man. And they're big they got big investments in OpenAI. It's like they're not fucking around, bro. They're not fucking around.
I like the stock, and I'm just going to keep dollar cost averaging into Microsoft. That's just my plan. So this is RCAT. Leonardo's asking my thoughts on RCAT, Red Cat Holdings. This is a drone company. So they supply drones, I believe, to the military. I don't know if they sell to individual consumers. We actually caught RCAT, this breakout over here, from 4 to like 7. I was like, oh, that's a good move. And then it went from 7 to 15. And it's just a wild, volatile stock. I would personally stay away. They do report earnings on March 31st. I think if you're going to speculate on RCAT, what you could do is, and I don't know the fundamental value of this company, by the way, you could just go and buy like a leap call option, January 15th, 2027. It's going to cost you about $150 to $200. And if it squeezes and goes hard in the next 2 years, you can profit well. You can also just wheel it. You know, every week you can get a decent return. You can get 1 to 2% a week to sell a cash secured put. If you get assigned, sell covered calls. If it goes underwater, you can just keep rolling out your covered calls. And that's one of the safer ways.
All right, you got one more, the homie Nav.
GME, they getting Bitcoin going to get crazy? You know, if you don't know how to run your own business, just buy Bitcoin.
Yeah, that's what motherfuckers doing. Hey, man, that's what motherfuckers are doing.
You know what we're doing. Let's just buy Bitcoin. That's exactly what's happening.
I wouldn't touch that shit.
Yeah, me personally, I like to invest in like real companies with
good companies. Like fundamentally, they're just not strong.
Yeah, no, I mean, you could
type one if you bought some from GameStop. Just in the comments, type 1 if you've bought some from GameStop in the last 12 months.
Yeah.
Just type 1.
Just a quick survey.
In the last 12 months, if you bought something, if you made a purchase at GameStop.
Market research, right?
Nav. Yo. All right. Hey, man, I stand corrected, player. You know what I'm saying?
Nav is a big Bitcoin bull, and I hope you get paid, Nav.
He's a Bitcoin right. And GameStop bull.
I want to short the shit out of GameStop. I didn't take it though. I was taking gold calls and stuff, and those paid out well. I would say you actually maybe could get a bounce. The chart is ugly, but GameStop has a way of just like squeezing randomly. So, you know, if you really want to take the speculation on it, go for it. Just know that like there's safer places to put your money with higher probabilities. You can always wheel it. The premiums are really high. I wheeled GameStop for a while, and it worked out really, really well. I was able to get like $200 a week back when it was during this volatility. And I took profits too once it started to break trend. So just stay nimble, like dial down your position size, know your risk, have some profit targets in mind, keep an eye on the volume. Like if the volume starts to break out, that's a hint that GameStop can squeeze. Me personally, I'm not going to touch it, but I hope you make money, Nav. I hope you straight
up. Yeah. All right. All right. Well, listen, guys, if you guys want to learn more about this, we got a free Discord. It's called the Victory Unit. It's a Discord. In there, Greg's giving out free stock tips, free advice. He's to post some free trade ideas in there. And I got free courses in there. I got a free course called Baller Mindset. I also got a free, it's all about making money. I got a free fat loss course. If you're trying to get in shape for summer, right? You want to check out my direct hit course. It's free. It's in the Discord. And if you want to trade with Greg and I, get Greg's trade alerts straight to your phone. Go ahead and when you go to Discord, just hit up Greg and say, yo, hit up Greg Young Candlestick and say, yo, man, I want to join Victory Trades. And that way you'll get Greg's trade alerts in real time as soon as he makes them and go straight to your phone. And you can trade with us in the morning. We trade every morning at the market open, Greg and I. All right, so you can trade with us. It's a good time.
It's a great time. One last thing I want to say, cherish life and make the most out of your life. Just before this podcast, on my way to the gym, somebody was hit on a hit and run, and the lady
Damn.
died. I had to watch her corpse.
Oh, you
It was
watched it?
crazy.
Damn.
Yeah, it was absolutely nuts. So value life, don't waste time. That's what I'll leave you off.
Hey man, don't waste time, man. Time is what life is made of. All right. Anyway, man, shout out to you, Greg. You know what I'm saying? Shout out to you. And rest in peace to that lady.
I agree. Rest in peace.
You know what I'm saying? Damn. I ain't
know.
even got no jokes for that, man. No jokes. Yeah,
No,
yeah.
me
All
neither.
right. I'll holler at you, bro. All right, go. I think I got some other super chats.
We have ketosis makes the hose drip.
What up, Mr. Hose Drip?
King Keto, how do you stay mentally resilient through life's highs and lows? And what are some of the key ways you've continued to sharpen and strengthen your mind over the years? Appreciate you, G.
The main thing is one of the main things that's helped me is meditation, right? And I've had a lot of highs and lows, right? You know, like I've had highs and lows over the last 24 hours, right? And I was also diagnosed with bipolar 2, that new shit. You know, when I was younger. And one thing's really helped me is meditation, right? So there was a Harvard study that showed that after just 2 weeks of meditation, it shrinks the part of your brain called the amygdala. And that's the spaz center. That's the part of your brain that causes you to spaz. That's where like fucking panic, fear, all that shit comes from that area of your brain. And it shrinks after just 2 weeks of meditation. I've been doing meditation every day for over 20 years. All right. And also it showed that there was another study that showed that people who meditate for 8 weeks, the part of your brain called the frontal lobe neocortex, where this is where logic and reason comes from, right? What happens is after 8 weeks of meditation, that part of your brain, there's more density. So it actually like changes your brain. So you're less of a spaz and you're more logical. You get what I'm saying? You're not freaking out, spazzing out. That's one of the main things that's helped me like a shitload, right? But also another thing I do is I reframe it. It's something called reframe it. Is the way you look at it. So every time I encounter a challenge, a setback, a disappointment, I think to myself, this is definitely not going to be the last challenge I encounter, and it might not be the worst. And because I'm dealing with this challenge, this is training for me to deal with the next one more effectively, right? I look at it like going to the gym. It's like, okay, man, bam, this is a challenge situation. This is going to make me stronger for the next challenge because the next one might be worse. And if you know what I'm saying, and because I handled this one, I'm able to do progressive overload and step up to the next one. Or if it's not as bad as this one, it's going to look like light work compared to this, right? So when you reframe it as it's making you stronger, reframe it as it's training. Right. If you want to be, you know, if you want more patience, you got to practice patience, but you only get a chance to practice patience during situations where you would normally be impatient. You know what I'm saying? If you want to be more mentally resilient, you only get a chance to practice that under circumstances when you're mentally challenged. Right. So, you know, when that reframe is something that's helped me a lot and served me well over the last few years. So meditation and reframing are the main things that have helped me in those regards. What else we got?
We have Mr. Out of Context. Your BBC, I'm looking to start a business thinking either video editing or online personal training. I'm passionate about both. How do I decide?
Yeah, you know, either one can be lucrative and you can make money doing anything. I can't tell you which one to pick because there's no wrong way, right? There's no wrong answer. What I would do is I would download that ebook, The 10 Commandments of Online Training, and really like learn more about online training and see if it's something you want to do. You might read the ebook and be like, this is not what I want to do, right? Maybe I'd rather do video editing, right? Or you may do it and be like, okay, this sounds great for me. And you can use that video editing skill to grow your online fitness business, right? Because, you know, one of the main ways I teach my students how to market themselves as online trainers is to build their social media. And, you know, video editing is a skill set that everybody kind of has to learn. You don't have to be as good as Nima or some shit, but you got to be somewhat proficient in it, and I teach that to my students and everything. So if you did online training, you could do both, but you'd be doing video editing for you. But read the book. You might say like, man, this ain't for me. I just want to sit at the crib and edit videos. And there's no wrong answer. But just check out the ebook. It's free. And then I think it'll allow you to make a more informed decision, if that makes sense.
We have Plays That Pay.
What up, homie?
Pretty good name. Will you open the influencer program again in the future for content creation? Any other content creation pages you recommend to learn from?
I don't know anybody who does it really well. My boy Ryan McGinn, who he's edited a lot of my videos. He doesn't like have a course on it or anything, but he talks about it on his Instagram. But yeah, influencer domination. We'll definitely open it up again at some point. You know what I'm saying? All right. I think Ryan does have an event coming up. Yeah, in Florida. All right. What up? Oh, we got Mr. Lounge.
We have Players Lounge, which we actually got this question. Yo, BBC, I've been working hella overtime, like you said, but I'm getting taxed like crazy. How do I avoid this? I wonder if he has 2 pages.
Maybe. I don't know. Maybe Mr. Lounge. You know, everybody pays taxes on. It's like just what it is. You can't avoid paying taxes. That's how you go to jail. That's what Wesley Snipes went to jail for. You got to pay your taxes, and if you don't pay them, they're gonna just take them. I remember one time I just didn't pay my taxes for a little while in New York State, and I was like, "Yo, that's a problem for future branding, right?" And then when it was time for future branding to handle it, New York State just took the money out of my account. I woke up and 200 grand was gone out of my account, and so they're gonna get their money one way or another, homie. You know what I'm saying? So but that was a catalyst for me moving out of New York State so I can avoid state taxes, and I moved to the great state of Florida. All right. Is that it? All right, cool. Let's get back into the real talk about it. All right. So we just talked about how to have your niche and we were just talking about your niche, who you want to talk, who you market to, what problem you want to solve, and how you're going to solve that problem. And we're going to find out what your target market's why is, and all your content is going to be made based around their why. Now, the next thing you have to do is figure out, now that you have your market, I'm saying all your marketing is going to be built around their why. Now, the next thing you need to do is figure out what your sales mechanism is going to be. Your sales mechanism. What I mean by that is, how exactly are you going to get clients? All right. When I was in business school, they used to teach us something. They taught us something called the customer journey. Right. So then there's a lot of different ways you can get a customer to the sale. Right. There's a lot of ways you can get here. Right. So when I first started my online training business, it was social media. This was the customer journey. Social media, boom. And then DMs, boom. And then I get then I DM them or whatever, boom. And then sales calls. And that's how I made the sale, right? That's one customer journey. When I had my supplement line, I had an exit on the supplement line, so I can't talk about it because of NDA, but I had an exit, and it worked out pretty well for everybody. And anyway, what we did was, initially it was social media, boom. Then it went straight to the website, which is a Shopify site at the time, boom. And then they would buy from there, right? But then you can also do, so I see some people who don't use social media all the time at all. And they go ads. You can go ads straight to your website, depending on what you're selling. Boom, sales, or ads to sales call, or boom, and then make the sale. So there's a lot of different paths that the customer can take. These are different journeys, customer journeys, right? And you want to map that out. And you want to pick the first thing you need to do is just pick the one that you feel like is going to work the best for you. I've seen people start with their business. They just started with ads straight to a website, boom, sales. I've seen people do ads straight to sales call, sales. I've also seen ads, boom, to what's called a lead magnet. You give them something for free, right? Boom. Then they're on their email list. Boom. And then from there, maybe you can go to a sales call. And then you make the sale. So you got to figure out what the customer journey. You might have to try different things, but you want to pick a customer journey. You want to try different things to find the customer journey that's going to work best for you, right? Your sales mechanism. And what you need to, that's the journey. But the mechanism, how you sell your product or service is going to depend a little bit on the price, right? So there's different things depending on what you're selling, right? So you can just have website, or you could take it to sales call, might be Zoom or on the phone, right? You can do live event. These is like a live event in person or a webinar. These are different sales mechanisms. Yeah, you know what? I made a mistake. This is shit. This is more of, I made a mistake. Just bear with me. This is more of the customer journey. Sorry, my pen is messing up. And this is the sales mechanism. But they work together. All right. Cool. All right. So you can do live events or one-on-one sales. One-on-one in person. Right. Now, typically, the more expensive something is, the higher you have to go up. Right. So cheap shit, let's call it $1 to 1,000. Right. You might be able to go to a website for $1 to 1,000. Let me make it a different color. Green is the right color for this. I'm tripping. All right. $1 to 1,000. Right now, 1,000 is like the top end for this shit. Because how often have you just clicked on a link, went to a website, and spent $1,000? It happens sometimes, right? But it's it depends, right? For 1 to 10, let's call it 1 to 10K. All right, boom. That's typically sales call. 10K to 25K. Typically, this happens at live events. One-on-one, like you might have to travel to the motherfucker, like 25K and up. And these are just like round estimates. It can all change. It can all change depending on what? Your credibility. credibility changes this. So the more credibility you have in the marketplace, like the more you can charge at a lower level, right? At the lower level of the pyramid. For example, if The Rock announced today, right? He has millions of followers, and he said, "Boom, yo, I'm gonna do online training, 25K for 6 months." And he could just put hit the link in my bio. He could sell that, right? The Rock has said it because he has way more credibility than that. And guess what? We talked about earlier. If The Rock is your trainer, it raises your status, right? Who has more status? The guy says, "Oh man, my trainer is just some fucking guy from Crunch," or someone says, "Yo, my trainer is The Rock," right? Who has more status? And people will pay for more status. We talked about that earlier, right? So depending on you, what your credibility, how much credibility you have, right? And the credibility depends on how far up the scale you can go, right? So credibility changes. This is average. Yeah, The Rock got so much credibility. This motherfucker launched the shampoo. He ain't even got hair. This motherfucker, the only hair he has is eyebrows. And he launched the shampoo. Homie launched, for real. Like, when you have credibility, you can get away with. The more credibility you have, the more you can get away with anything. Hold up. This motherfucker really got a shampoo. You know what I'm saying? The Rock is selling shampoo. The Rock, this motherfucker, he had the nerve to put himself in the ad for shampoo. What the fuck? The only hair he got is eyebrows. This is astonishing. Like, if you got, I'm telling you, credibility changes the whole game. Right? Credibility changes the whole game. Right? So, but let's assume you have very little credibility, right? This is a good scale for you, right? So if you're selling cheap shit, boom, you can just send people to your website. But you still got to figure out what the customer journey is going to be, right? Are you going to run ads? You're going to have social media presence. You know, are you going to ads to a lead magnet and sell them on your email, warm them up, right? Which just, you got to figure out what the customer journey and the sales making them. Once you have that master, go all in on it. Go all in. You only need one sales mechanism to get to $1 million a year, right? You only need one sales mechanism. And then once you get past $1 million a year, now the next step is to increase, to really start scaling. Because $1 million a year, that's like, okay, it's like, okay, man, you in the game. Like, you really in the game. You really doing this shit. Right now, it's still a big accomplishment. I don't want to minimize it, right? But it's just a start. Like, you in the game, you're making $1 million a year. You in the game now, right? You're legit. But it's still just the beginning, right? But I don't want to minimize it because only 5% of businesses get to $1 million a year. But now you want to scale to multi-millions, right? What we have to do is we have to understand the scaling formula. I made that up just right before I said it, right? Formula, right? All right. And it's all it is cost of acquisition, CAC, like how much it costs for you to acquire a customer versus lifetime value. How much a customer is worth over the lifetime of their interaction with you and your business, right? So sometimes it's called CAC, right? Cost to acquire a customer, or lifetime versus lifetime value. This is the whole game. This is the whole game. So if you ever watch Shark Tank, they always ask when they're interested, how much does it cost you to acquire a customer? Right? What's your cost of acquisition? Right? You got to figure that out. Right? And if you're doing all social media, maybe it's free, right? But it's difficult to get to over $1 million a year without implementing some ads at some point, right? So you figure out how much it costs you to acquire a customer, and then you find out what the average, how much the average customer spends with you during the lifetime of them being in your, how much a customer's going to spend with you throughout, you know, the lifetime of their interaction with the business, right? And the key is we want to lower, fuck. Gee, I'm having a hard time to spend today. All right, we want to lower cost of acquisition. Boom. And we want to increase lifetime value, right? Now, lowering cost of acquisition. This comes from, you know, basically split testing ads, web pages, websites, you know, landing pages. Right? Ad copy. Oh. And improving offer. Like the more you can improve your offer. Yeah. Right. I can do a whole day seminar on each one of these things. You know what I'm saying? It goes in depth, right? You know, different ads, different offers, different websites, web landing pages, right? Improving the offer, right? Or even this might be when you want to start changing. You might want to split test sales mechanisms, different sales mechanisms. Right? Is it you might have to start testing. Is it more profitable to go straight from the ad to the website, or is it more profitable to go for the ad to a sales call, or is it more profitable to go add to a lead magnet, get them on your email list, warm them up, and then sell them? Right? You're gonna have to split. You're gonna start testing these things. Right? If you're not testing, you're guessing. Because one of these little things can dramatically decrease your cost of acquisition, and for increasing lifetime value, there's a few things you can do. One, you can sell more things to existing customers. These are called upsells. Right? Like if you go to McDonald's and you ask just for the burger, they say, would you want the meal? Right? She's not doing that because she's trying to help you. Like she's trained to do that to increase your average order value. Right? So these are sell more to people. These are upsells. Oh. Right? Right. You can do cross sales. So a cross sale is something like, let's say Nima, he's a video editor, right? And he's working with somebody, a business owner, and helping him make videos, right? But his homie is a copywriter, and he can refer him to someone else. He can refer him to his copywriter, and maybe he can get a commission off of that. You get what I'm saying? Then this, now he's double dipping in the customer. Pause. Right. And they having a financial freak off at this point. Right. You can also increase purchase frequency, especially if you have something consumable. You can offer, discounts for them to buy more frequently. And these are a few of the things you can do to make more money off each customer, right? And this increases your lifetime value, which makes your ads more profitable. It makes all your marketing more profitable because now you're making more money off of each customer, right? And if you lower the cost of acquisition, then that equals profit, right? Oh, and one thing you can do that's really helpful is increase the speed of purchase. Well, we already did that. Increase order frequency, right? Because the faster you can increase the lifetime value, the more money you can make. So this is a concept that's, hopefully I can articulate this right. Right. Let's say the LTV of a customer is $10,000, right? Right. And the cost of acquisition, right? Cost to acquire a customer is, it costs you $5,000 to get a new customer. It's just, I'm using simple math, $5,000. Well, it makes a lot of sense. It's like, oh, this makes this $5,000 profit. But what if it takes you fucking 10 years? What if it takes you 10 years to realize it's $10,000, right? But you have to pay this up front. Now you're in the red. You get what I'm saying? Now you're in the red. But if you can increase the speed that you get to this $10,000, right? You can be more profitable sooner. You get what I'm saying? So it's something I call, I never heard anyone say this, but I call this income velocity. And I think about this all the time. This is something I think it's not just about how much money you make, it's how fast you can make the money and what time frame you take to make the money. The higher the income velocity, the more profitable you can be. Because you got to remember, just think about your own life. You got bills every month, phone bill, rent or mortgage, electricity, child support, a bunch of shit that you got to pay every month. You got bills every month, right? And if you want to be profitable, you have to outpace the bills every month, right? You have to make more money than you're spending every month for each month to be profitable, right? So if somebody said, "Oh, I made $1 million," right? If they did it in a month, that's fucking amazing. If it took them 10 years, that's fucking regular. That's nothing. You get what I'm saying? So the velocity really matters, right? So we want to increase the velocity of the lifetime value, right? Because 10 years might not be enough. However, the longer you can wait till you need to get paid, the more money you can make. This is something that was taught to me by one of my mentors. Like, if you don't need to make, let's say you run ads, right? You run ads, you spend a lot of money to get a customer, and you know it's $5,000 to be a customer. If you don't need to get, the sooner you need to make this money back, the more danger you're in as an entrepreneur, right? If you got a big of a money surplus where you don't need to make that money back for a year, then you can just keep spending money for a year as long as you know you're going to make it, right? And these are just things you have to think about. You have to think about not needing it right away, but you also need to think about increasing the velocity so you'll be more profitable sooner, because then you can keep flipping the money. Like, if we take this from 10 years to 10 weeks, then we can flip. Let's say 10. Let's just say from 10 years. Let's say 1 year. Boom. Then we can flip this money every year. You get what I'm saying? But if we can only flip it every 10 years, we'll probably go out of business unless we have a huge surplus of money, right? So you want to really increase the velocity of the income, right? And the main way to do that is it's the same stuff we talked about with increasing the customer value. But as soon as you get a customer, you need to have upsells and cross sales ready. This is at the $1 million mark, right? When you really start making money, you need to have upsells and cross sales ready to go, and you need to have a mechanism to increase the frequency, like immediately. As soon as you get a customer, you need to think of other shit, right? If you're an online trainer, Maybe you get yourself a motherfucking affiliate code with a supplement line. Right, that's what I did. I had affiliate codes with supplement lines when I first started. Boom, and I'll say, "Yo, man, all right, here's your workout plan, bro. You need these supplements too." Right, I'm immediately trying to increase the lifetime value. Here's the supplements I take. I think you should get them too. Right, and that's why I started my supplement line when I was an online trainer. Right, because I needed to really increase that lifetime value, so I was even more profitable. Does that make sense? So my whole supplement line initially was just to have something to sell to my existing clients. Right. Right. But first it was cross sales with other shit. And then I made my own products, and then it was upsells. Right. And then you got to find ways to increase the frequency too. Right. So you can offer them in a way. Sometimes this is why companies will give you discounts if you buy more of the shit. You get what I'm saying? If you buy it in bulk, because they want to increase the income velocity, because they want to be profitable sooner so they can keep flipping the money. Right. This is something you need to think about. And if you can implement all these tactics, and you can make money, you can start making money super fast. I know I probably threw a lot out at you, but this might be a video you have to watch again. All right. Listen, if you want to learn how to start your online fitness business, I've taught over 15,000 people how to grow online fitness businesses, successful, profitable. If you want to learn more about that, I got a free ebook called The 10 Commandments of Online Training. The link is in the description. It'll show you how to grow your online fitness business, even if you don't have a big following, even if you're not certified, even if you don't have a lot of experience. It gives you the game plan on how to do it. It's free. The link is in the description. All right. Cool. I think I have another super chat.
You do. We have Leo again. Yo, BBC. Currently doing Uber, have 5 figures. Any ideas for flipping money or other easy entry, high pay jobs?
I mean, I don't know what your skill set is, you know? I don't know what your skill set. I mean, Uber sounds just amazing to me because, you know what, I was working security and shit. You know, I was fucking working for moving companies, and that shit was stressful. Excuse me. Uber wasn't out there, and I wish I could have just drove motherfuckers around all day, right? You know? But yeah, I don't know what your skill set is, and I don't know what you're qualified to do. You get what I'm saying? So it'd be difficult for me to make a fair assessment, right? Maybe drive Uber more. You know what I'm saying? Drive Uber more, man. Drive fucking 12, 14 hours a day until you figure out something else, you know? 5 figures is cool. The average, so congratulations. The average American has less than $1,000 in their bank account. So you got 1 rack at least, right? You just need to get some more, man. The way you get rich is you make more money than you spend, and you invest the difference. If you do that over a long enough period of time, you will get rich. You will get rich. It took me like almost 10 years of doing that, and I got rich. And you can do the same. All right. All right, guys. This has been another episode of that Victory Talk podcast. We do this every Tuesday and Thursday at 7 o'clock Eastern Standard Time. See y'all next week.